Hold on to your wallets, folks, because Donald J. Trump is back in the White House. After a tumultuous first term and a controversial hiatus, he's returned with a vengeance, ready to shake things up once again. Whether you're a staunch supporter or a vocal critic, there's no denying that Trump's presence in the Oval Office brings a whirlwind of activity and change. His policies, his tweets, his very persona have a way of dominating the news cycle and capturing the world's attention. Love him or hate him, one thing's for sure. Trump's presidency means big changes for the American economy. From tax reforms to trade deals, his administration is poised to implement a series of measures that could have far-reaching impacts. Businesses are bracing for new regulations, while investors are eyeing potential opportunities. The stock market, always a barometer of economic sentiment, is already reacting to the news of his return. And where there's change, there's opportunity. For savvy entrepreneurs and investors, this could be a time of unprecedented growth. New policies could open doors to industries that were previously overlooked. Innovation and adaptability will be key as the business landscape shifts under Trump's influence. That's right, people, we're talking about cold, hard cash. The potential for profit is immense, but it won't come without its challenges. Navigating the complexities of a Trump-led economy will require keen insight and strategic planning. Now, I know what you're thinking. Suze, isn't this all a bit risky? And you're not wrong. The volatility that comes with Trump's policies can be nerve-wracking. Markets could swing wildly, and the regulatory environment might shift unexpectedly. It's a high-stakes game, and not everyone will come out a winner. Investing in a Trump economy is not for the faint of heart. It requires a strong stomach and a willingness to take calculated risks. But for those who can navigate the turbulence, the rewards could be substantial. But for those brave souls willing to take a chance, the potential rewards are enormous. Imagine being at the forefront of a booming industry, capitalizing on new opportunities as they arise. The thrill of success in such a dynamic environment is unmatched. Over the next few sections, we're going to dive deep into the world of Trumponomics. We'll break down the key economic policies that are set to define his second term. From tax cuts to infrastructure spending, we'll cover it all. We'll explore the key policy changes you need to know about. Understanding these changes will be crucial for anyone looking to make informed decisions in this new economic landscape, and uncover the hidden profit opportunities that could make you a fortune. We'll provide insights and strategies to help you navigate this complex environment and come out on top. So, buckle up, Buttercup, because we're about to embark on a wild ride through the world of Trump's 2025 economic policies. This journey promises to be filled with twists and turns, highs and lows, but for those who stay the course, the destination could be incredibly rewarding. Get ready to dive into the heart of Trumponomics and discover what it means for you and your financial future. Remember when Trump promised to bring back American manufacturing? Well, guess what? He meant it. With tariffs on Chinese goods higher than ever, companies are scrambling to bring production back to the good old US of A. This means one thing: opportunity is knocking. As factories reopen and production ramps up, demand for everything from raw materials to transportation is going to skyrocket. So how can you get in on the action? One word: industrials. Think steel, think manufacturing, think logistics. And don't forget about the railroads, those iron horses that will be hauling all those made-in-America goods across the country. Look for companies that are expanding their U.S. operations or investing in new technologies. And remember, investing in American manufacturing is not just about making money. It's about supporting American jobs and rebuilding our industrial heartland. Tariffs might be a boon for American manufacturers, as they can make domestically produced goods more competitive against foreign imports. This can lead to increased production, more jobs, and a boost to the local economy. However, the story doesn't end there, but they're a pain in the neck for everyone else. Consumers in particular feel the pinch as the cost of everyday items rises. This can lead to a decrease in consumer spending, which affects the overall economy. Those higher prices on Chinese goods are going to hit consumers right where it hurts, their wallets. The increased costs can be seen in everything from electronics to clothing, making it harder for families to make ends meet. But don't despair. There's a silver lining to every tariff cloud, and it's called import-export arbitrage. This strategy allows savvy business people to find new opportunities in the global market, turning challenges into profitable ventures. Here's the deal. When tariffs make Chinese goods more expensive, it opens the door for products from other countries to enter the market. This creates a unique opportunity for those willing to explore new avenues. Savvy entrepreneurs start looking for alternative sources for those products. They research and identify suppliers in countries that are not subject to the same tariffs, ensuring they can offer competitive prices. Think Vietnam, India, or even Mexico. These countries have burgeoning manufacturing sectors and can produce goods at a lower cost, making them attractive alternatives to China. Find a supplier in one of these countries, import the goods to the US, and sell them at a competitive price. This not only helps you stay ahead of the competition, but also provides consumers with more affordable options. You'll be undercutting those businesses, still relying on Chinese imports, and raking in the profits. By staying agile and responsive to market changes, you can carve out a niche for yourself in the import-export industry. Platforms like eBay and Etsy are perfect for this, offering a global marketplace where you can reach a wide audience without the need for a physical storefront. Especially if you use dropshipping to minimize your upfront costs. This method allows you to sell products without holding inventory, reducing your financial risk and operational overhead. Just be sure to factor in shipping times and currency fluctuations, as these can impact your profit margins. Staying informed about global economic trends will help you make better business decisions. And always do your due diligence before partnering with a new supplier. Research their reputation, reliability, and product quality to ensure a successful and long-lasting business relationship. By taking these steps, you can navigate the complexities of the import-export market and turn challenges into opportunities. Let's face it, people are obsessed with Donald Trump. His name alone sparks intense emotions and endless debates. Whether it's his policies, his tweets, or his public appearances, Trump has a